Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream. All right, everybody, welcome back to another live stream. I hope you're doing well, and shout out everybody for surviving another crazy week in these markets. We've got the dollar index taking out lows here today. We've got gold bouncing a little bit. Silver is making a push back towards its recent highs, and the indices looking strong as ever with fresh all-time highs for the NASDAQ. Take a look at this. So we have made it all the way back. Yesterday, officially, we tapped a new all-time high for the tech sector. Specifically, the NASDAQ is really leading the charge. We do have SP500 getting close to its all-time highs, but NASDAQ is already above them. So very impressive rally when it comes to tech in general, really making a strong push towards those highs. Excuse me. And if you have been keeping an eye on the indices with me, we've been doing a lot of coverage of the indices this year because, of course, we had some really big moves lower in stocks this year. Initially, as kind of everything with the uncertainty around trade dynamics really made investors uncertain about what things or what kind of landscape we're going to be looking at. Are we going to look into an environment in which the U.S. is very much up in arms in trade dynamics with many other countries, which could seriously disrupt the flow of goods throughout the world, which could in turn cause some supply issues, cause some inflation, cause some slowdown in the economies of the world. The market got really scared. And of course, since then, we've had a remarkable recovery as many other nations and the US seem much more poised to negotiate than people had previously thought. Not going to lie, included in that group was myself, initially, when we saw, Trump take up that cardboard, tariff board. It really spooked investors big time. And we saw a huge sell-off during that time. However, I have to continue to pat myself on the back a little bit. During that time, we were buying stocks on this channel. If you're watching the channel, that to me, before April 2nd. So here's where I was wrong. I actually thought that the April 2nd day, if you go back and watch my videos before then, I made the idea, or I made the idea clear in my head that I actually thought that the April 2nd day would likely be a bottoming point for the stock market, because everybody was so scared of what Trump was going to say. And then, to my surprise and to the markets, not only did he say some scary stuff, he said stuff that was even scarier than what I thought and what the market was expecting him to say. So the reason I tell you this is because we were actually correct in thinking that the market would bottom out shortly after the tariff announcements. But I was wrong in saying that I thought that day we were going to get a turnaround in stocks and that likely Trump was going to be more willing to negotiate than people thought. Now, again, that's not a statement of like, oh, I'm a huge Trump fan. It's just that Trump is, he is aware that if you completely, disrupt trade globally and none of our partners will even budge with us, then it's going to be terrible for the stock market. And Trump is a stock market guy. He's a real estate guy. He's an interest rate guy. He's a stock market guy. He knows what that would have done to the stock market. So amazingly, and this is where, there's all sorts of speculation about whether or not this was market manipulation. The stock market dropped precipitously in response to these very, very high level tariffs that were proposed that, by the way, in my view, and I was correct about this, although I was early to the idea, we're never going to stick. As soon as though that board came up, the market started selling like crazy. And when we flooded lower here, when we just dropped precipitously from there, I bought stocks. Now, I bought stocks before then, so I didn't time this perfectly by any means, but I added more shares to my portfolio during this time because my thought process is, okay, Trump's going to see this and he's going to say, yeah, we're going to send us into a recession if we don't make some moves. And so he actually put out a tweet, this is not why I bought stocks, by the way, but he put out the tweet, it's a good time to buy stocks or whatever. By the way, there's an infamous example of Obama doing that in 2008 too. And it was a pretty amazing signal when Obama said, hey, it's a pretty good time to be buying stocks. He said it in 2008 and he was correct. It was probably one of the best times to buy stocks in our generation. And so will we see a repeat with the Trump scenario? Who knows? We'll see. But there was, people can call it manipulation, whatever. I think that, Obama said it, but Trump said it. If they believe the stock market goes up, they do have some information that the rest of us don't have. So you could kind of consider that borderline. But, he believed that negotiations were going to happen. And since then, we've had a 90-day pause. Boom, the market absolutely skyrocketed on that news, up 10% in a single day. And since then, the market has kind of sniffed out that Trump is going to negotiate with these other countries. And I've said this in the channel recently. If you don't like Trump, you've accused him of always chickening out. And if you do like Trump, then you've defended him and said that he's just a businessman negotiating, not chickening out, right? Doesn't matter really, because from a perspective of like how this impacts the markets, the market figured out whether it's taco or negotiating, who cares? The point is the market realized those tariffs, those extreme, isolationist level tariffs were never going to stick. And so the market said, okay, tariffs are just maybe he's going to take taxes off over here. We're going to put them on in tariffs. Who really cares? Stocks are doing great. Companies are booming on the AI stuff. Company earnings look really strong. Up goes the market. Not only that, we have inflation cooling. We have interest rates expected to come down this year. Most Fed members expect to cut rates this year. The story here for stocks is, in my opinion, a very good one, right? And so when we have this big market sell-off, I was buying the dip the whole way down. And it wasn't because I like Trump or dislike Trump. It was because great companies were on sale and people were panicking. And that's the time that I typically do buy stocks that I like. If I liked stocks over here, or I liked certain companies over here, I really liked them down here, right? So from a longer term perspective, that was a wonderful buying dip opportunity. And I hope some of you guys capitalized on it as well. But now when we look at the trading side of things, when we look at the indices, we say, look, we've got stocks break into all-time highs. That's a bullish thing historically. When stocks hit all-time highs, most of the time they continue to put in new all-time highs. Not always, and we could get sharp reversals and pullbacks and things like that. But again, momentum here definitely favors the bulls now. Guys, we've got news here. We've got the unemployment claims coming out this morning. Let me just pull this up really quick. So we have unemployment claims and final GDP statistics coming out this morning. We will definitely keep an eye on this. So what I'm going to do is I'm just going to switch over my all markets view. And again, with markets at all-time highs, let's see what happens with our unemployment claims and our GDP statistics this morning. This will impact the score on the Edge Finder for several markets, currencies, indices, commodities. So we'll keep an eye on this final GDP number. That will be impactful. And we'll also be watching the weekly unemployment claims to see if we have any uptick. I mean, this is the big thing, is are we going to get any uptick in unemployment claims? We've recently had a rise in unemployment claims. Nothing super threatening, but we want to keep an eye on that. Okay, so I've got all of our markets here. News will be dropping in the next few seconds. We've got SP500, NASDAQ, gold, Bitcoin, oil, dollar, Russell, and here's Dow Jones. Let's see if we get any movement. News should have just dropped in the last few seconds. We also get durable goods orders this morning, which could be interesting. Ooh, look at this. Final GDP coming in real soft. Final GDP coming in minus 0.5% compared to the expected 0.2% decline. Just waiting for unemployment claims here. Dollar index slightly lower on this. Stocks pretty unmoved so far. And there is, oh, and there's why. Some good news and some bad news. Bad news, GDP numbers were a little soft. Good news, well, they were soft. Good news, unemployment claims down to 236K. We'll take it. So good news, bad news, cross it out. I would say they're sort of similar in terms of their, also durable goods orders up pretty considerably there, both on the month over month for core and not core. Let's just take a look at how the dollar is moving in response to this. Dollar index slightly regaining its gains. Stocks still up considerably here today from those lows that we put in, kind of the sell-off we saw yesterday. And there's the final GDP price index just coming in slightly higher than expectations. So yeah, again, unemployment claims, let's see, do they revise this? 245 to 246. Yeah, so unemployment claims were a good number, and final GDP was a little bit soft. So overall, I would say that this kind of has a mixed impact on the US dollar this morning. Yeah, so wouldn't expect too much of a move in either direction, at least off of this numbers. You got one good thing, one bad thing. Let's take a look here. Let's zoom in a little bit closer. Indices still pushing higher here. You got the DAX up 0.36%. I've got a trade on this one. Russell, I'm also sitting in a trade on this one. Dollar index taking out those lows here, breaking lower here as we speak, but kind of a mixed reaction to the data points that came out this morning. Here's the 5-minute chart just to get an idea. You can see the unemployment claims ticking lower is definitely taking a little bit more priority here on the dollar, at least, but it's not a big move. I mean, these are hardly with hardly any conviction one way or the other. NASDAQ dropping slightly here, but nothing crazy here either. Take a look at the 4-hour chart, pretty much unmoved so far. If you're enjoying the stream, do me a quick favor, subscribe if you're new, hit the thumbs up button. Let's dive into some more charts. Let's talk a little bit about gold. So for the gold traders out there, I'm curious what you guys think. In the audience, if you trade gold, let me know. Are you bullish on gold or bearish? You think this thing's going higher, or do you think it's going lower? What's the sentiment in the audience from the gold side of things? I'm curious to see what you guys think. We've been really kind of consolidating in the last few weeks on gold. Well, really few months. We had the big, everybody got real scared during that April kind of low. And actually that ended up being, well, actually Tesla and gold are competing for the top trades that I've had this year. I have a trade that I placed on Tesla that's still in from the April, towards the April lows. I caught a pretty good move on Tesla. I also caught a really great move on gold. Ended up giving back a little bit of gains though, because I tried to get long gold again and ended up stopping out. So I made some really nice gains here, had a loss on gold, and have really not traded it since. Let me see what crowd sentiment. So we got some bears, we got some bulls. Bullish looking for a pullback, too overextended. Bearish. Okay, cool. Yeah, so I think like gold has just been very much in a range here recently. I think if you're bearish on gold, you probably are looking for this level here to break out to the downside. So if you were to get this break of 3,300, we saw yesterday, well, the day before actually, we saw some pretty good response to the 3,300 level getting hit. Take a look right here. Look at how, you know, we came right into this zone and buyers stepped right up around 3,300. So I think if you're bearish, in my opinion, let's see if we can actually come back down to that level and actually break through it. So we did get the bounce off of that area. The question is now, can you actually get follow through to the downside? Or are we just, you know, the gold has been a bit frustrating in terms of a directional bias for me here recently. Gold is getting a bullish score on the edge finder. And I might be willing to try that 3,300 level. But from a price action perspective, it's been really choppy. Like sellers coming in really strong here, buyers coming in really strong here. You've got this upward trend line. I think if you're a bull, then the exact opposite, right? We come down to this 3,300 level. You want to see that level get held or just continue to hold from where it currently sits. I do personally lean a little bit more on the bullish side of gold, but I'm being really selective and not really in a big hurry because of the nature of how this thing is trading right now. Right? It's just very sideways. We're very choppy in gold right now. And so I'd look for, personally, a pullback down. I would have taken this trade. I just wasn't looking at it at the time. So I'd probably take this long trade personally, or I'd look for this move. Both of these scenarios I like for possible longs on gold. We do have edge finder confirmation, so I like that quite a bit. Also, if you haven't already, the edge finder currently is completely free to try out this week. Check this out. If you are not currently using the edge finder this week, it is completely free to try out. So if you're somebody who watches the videos, you watch the streams, you enjoy the commentary, then obviously you have probably seen or heard me discuss the software tool that's on the screen right now. The edge finder is a tool that my team and I have been working on for the last few years, building a tool set of sentiment, technical, and economic data to help traders to build more insights into why they're trading what they're trading. A lot of traders, they will really square up with only using the technical analysis that's on their chart. And I'm not here to discredit technical analysis at all, because I use it in my own analysis, right? I do look at key levels and breakouts and pullbacks and all of these things. But years ago, I realized that what was really driving these big moves was always some level of really big fundamental catalysts, right? Something really strong in the fundamental story, the economic data, et cetera. And so what I've seen, or what I did since then, years ago, is I started exploring and learning about fundamental analysis, which is understanding economies of the world. It's understanding what the Federal Reserve or the European Central Bank or the Bank of Canada, the Bank of Japan, these money liquidity controllers, right? What are they doing? Are they printing tons of money, or are they pulling back on spending? And understanding that is what ultimately moves the market, not some fancy candlestick pattern that you put a cool name on. That's not moving the market. That is a framework, and it's a technical analysis, way of expressing what's happening on the chart after the fundamental data is going on. But technical analysis, in my opinion, is severely overrated. Now, I'm not saying it's useless. Something can be overrated and still be good. Like, I use technical analysis. However, when it comes to the edge finder, the goal with the edge finder is to build out a tool set that allows us to actually look at fundamental analysis easily and quickly. Like we just added today, actually, interest rates, historical interest rates for various countries. And this stuff is powerful for your analysis. But then beyond that is understanding overall, right? When we look at across all this data point, because this is very time consuming to look at all of the data by yourself, right? But to have a system that will scan all of that stuff. I mean, we've built thousands and thousands and thousands of lines of code to scan all of that stuff automatically, to pull in the data, scan it, and essentially generate bullish and bearish signals for each of our favorite assets. And that essentially automates the process of building out a watch list for me each day. So that's the point. But the Edge Finder is free to use this week, right? So if you are interested in trying it out, there's your chance to do so completely for free. You can explore the tool. You can see if it's right for you. And if you decide you want to buy it at the end of the week, great. And if you decide you don't want to buy it, no problem at all. And I hope you learned something during your trial. Totally good. Nick, the entirety of this trading planet is designed to steal retail traders' money. So technical and sentiment analysis, I think, is better. Nakash, that's a good point. I mean, understanding sentiment is really powerful, right? Understanding, if the crowd thinks a certain way, understanding what they're thinking so that you can potentially trade against it. I like that concept, right? That concept of sentiment plays a big role within the Edge Finder. We've built several tools surrounding market sentiment, right? We can track what institutional money is situated in. Are they buying the dollar or are they shorting the dollar, right? Clearly, institutions employ teams of really intelligent people with great track records in the markets. That's who they sort of weigh heavily on. And so if they're buying gold or shorting gold, us knowing that can be a useful tool to add to our toolbox. Is it going to make trading just easy peasy, just follow them and make millions of dollars? No, not quite. But it can add more confluence to what we're doing. And I think most traders are just missing that level of insights into what they're doing and why. Most traders are looking at a support level and they're like, hey, it's hitting a support level, I'm going to buy it. Or it's hitting a level of resistance, I'm going to sell it. And that's like 90% of the due diligence that they do behind a trade. And they wonder why trading is not working for them, right? If you're just marking up support and resistance or fair value gaps or triple tops or pullbacks into a support level and an uptrend, and you think that's going to be enough to take money from the global market, like it's going to be a really hard time. And unfortunately, many traders learn that the hard way. It's not going to be so easy as some, available to everyone YouTube channel that teaches you some sort of easy system or magical, secrets of the market channel. I mean, those things are, I don't know how people don't see that is so obviously kind of a gimmicky, I pretend to know something. It's kind of like QAnon, right? When people when they act like they have some sort of really secretive trading strategy, or that they know something that the rest of us don't, it's no wonder that attracts people, because it sounds really cool when people are like, wait, so you discovered some secret candlestick pattern that's going to tell me where the market's going to go? It truthfully, it flies in the face of people who actually understand markets and who actually have track records and trade in the markets. It's honestly like blatantly disrespectful when people kind of make the statement that some secretive little candlestick gimmick is going to make them rich in the markets. It's like, it's very disrespectful almost to people who have earned their track records in the markets, to hear that sort of nonsense. There's no holy grail secret system that's going to tell you what the market is going to do next, right? And I think that's where there's a lot of pushback on the stuff like ICT and things like that. That's, people who there, and I'm not saying if you trade with smart money concepts or whatever, and you do well with that, then great. But I think people who do well with that probably also feel a little bit of annoyance with the people who are like, your stop loss is my entry, and all the kind of nonsensical arrogance that there is in the trading space. You have to be really careful. Yeah, all of that doesn't work if you don't do one thing: risk management. That's very true, Bala. That's the truth. when it comes to trading, like no matter what your system is, that's the other thing people miss. You might have the greatest entry system on planet Earth, but if your risk per trade is too big, it doesn't even matter because nothing is that predicted in markets. Like nothing, I can't tell you guys how many people make the mistake of believing that they can predict the markets better than they actually can. Once you actually start to be like, you know what, this is very hard to predict. Once you embrace that and you start saying, okay, I don't know what the market's going to do perfectly, but I have an educated guess and here's what I'm going to do if I'm wrong. And here's what I'm going to do if you start thinking methodically about it, things start to clear up a little bit. The problem arises when people believe they have some sort of secret candlestick pattern, triple whatever, and they put a cool fancy name on it. They're like, oh yes, this model will make you a millionaire, like all that stuff, right? And they believe so strongly, they know what the market's going to do next. And so they risk heavily on it and they blow up their, $300 account. And then they start it all over again with the next model the next year. That's silly, right? Trading is hard. There's no secret candlestick pattern that's going to make this all easy money and you're going to be able to sip pina coladas on the beach. Like, I don't see how people don't see that that's a facade. It is. It's a facade, and real traders can show track records, point blank, period. That's it. I mentioned this earlier, but just to make sure everybody gets a chance to try it, the Edge Finder free week is ending by Monday. So what I mean by that is that we are allowing everyone public access to the tool during this week only. So if you want to try out our tools, if you want to explore all the different things that we've built over the years, our collection of interest rate data, inflation data, retail positioning data, institutional positioning data, our top setups algorithms that help spot potential opportunities in markets. If you want to explore our fleet of tools here this week, you can do so. No questions asked, no payments required. Try it here. If you like it, buy it. If you don't like it, all good. Thanks for trying our tools, and we appreciate you maybe leaving some feedback for us. How about the VIP Discord? That is not something we're offering right now for free or anything like that. If you want to join, we do offer like monthly memberships if you want to try it for a month, if that's something that you're interested in. If you do want to try it and see if it's right, send us a direct message on our website, a1trading.com, and maybe we'll drop the link here in the chat to set that up. Okay, I think up next we have, I think it's Miko and Marco, but Marco has not yet arrived. So maybe we'll just say hello to Miko in just a second, and maybe Marco will join us in a moment. Maybe he won't. Up next, Miko at least, possibly Marco as well, just after this quick break. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, we're back with just Miko today. I just got confirmation from the producers. How's it going, Miko?
What's up? What's up, Nick? How are you?
I'm good. It's good to have you back on the show. So every week we do this session where we go through charts with usually Miko and Marco. We do kind of a trio effect, but today it's just us. Marco won't be with us today, so if you missed him, you can still check out his YouTube channel. But today we've got Miko, which we're in good hands with Miko. So good to have you here. What are you watching right now?
Yeah, so I'm keeping an eye on some of the USD pairs. Of course, we've just seen a lot of weakness recently. I've been a bit skeptical, haven't really been looking to trade the dollar until I see some momentum, some direction, because it have been a little bit stale. But with this recent breakout on pound, I do like what I see. We've had a very, very choppy sideways market. I was kind of waiting to see which way price will go. At one point, it looked like we might break lower. But the past few days, price has really pushed up very well, and we've seen a pretty decent break of the high. So it looks to me that this overall uptrend is still at play, and perhaps we could still see higher prices. So I am looking to see if I can get a retest of this prior high, which is around 1.36. Nice kind of brief pause there as well. A lot of momentum in the 4-hour chart. So this does interest me. Of course, keeping an eye on the dollar. that still looks like it's got room to fall as well. Of course, we just cleared the key support there too. So if these kind of play with each other, USD keeps falling, I expect pound USD to keep rising. Then it's just up to the market if I can get a decent pullback. But I like the look of pound USD.
Yeah, pound dollar looks just incredible. Most of the dollar crosses moving pretty decisively here. Sounds like you're still on the bearish side as well, with the US dollar, myself included. I traded euro dollar, but now I'm kicking myself for getting out a little too early on this one. Took profits on this move. I caught like this candle right up to here and then just closed it, with the idea of like if it doubles back, it comes back, I'll grab it again. But looks like I missed that breakout, but totally okay. Take them where you can. Pound dollar, like you said, looks really strong here. Just clear breakout through those highs. And Miko, this has been one of our picks this year. I feel like the last few months that we've talked about this, you and I are a little bit more on the swing trade side. So we typically will, I've noticed just from our conversations, that we both will like find an idea and you'll kind of hover around that idea for a few weeks. Like if you're in the trade, obviously you're managing it, you're looking for exits. And if you're not, however, you're still kind of monitoring it and watching for a while. So, sorry if you already said it, but did you take a trade on the pound dollar? Are you in a position?
No, I haven't been in the position for pound. Okay. I've been waiting to see what price did with the range, which way we broke out. So I've been waiting for that, and now that we've had the break, now I'm interested for some pullbacks.
Yep, looking for the pullbacks. Yeah, okay, yeah, that makes sense. What about the yen pairs, Mika? We've got dollar yen super choppy. I've been kind of, when it comes to dollar yen, I feel like I've just not had a very strong directional bias in a minute. But maybe some of the other yen pairs. We've got, pound yen coming down a little bit here. Pound yen broke out of this kind of long-term channel that we've been in. CAD yen seems to be trying to break out of this. What are your thoughts on yen crosses right now?
Yeah, yen's been a bit of a mixed bag. Some yen pairs have been trending, some have been a bit flat. I think as a whole, yen is on the weaker side of things. I've had a look at the yen basket a few times today, and the yen seems to be, as a whole, heading down. We've seen a bit of strength maybe the past 24 hours, but as a whole, heading down. But yeah, pound yen, relatively nice break to the upside. I would be bullish on a market like this. I do think we can push back to 200, which is some major resistance above us. Euro yen has been quite bullish, to be fair. That's probably been one of the clearer trends. We've just smashed through some major highs there as well. I'm wondering if this breakout really does mean business, because the next big target for euro yen would be 175, which is where we had the massive sell-off last year. Possibly we could see price push there if yen does stay weak. Dollar yen, on the other hand, that's actually been falling. So a bit of a contradiction there. Of course, with USD and euro being different, euro being stronger, USD being weaker. But this has actually been falling, and I actually would be pretty bearish on dollar yen. I think we can make another move back into support. I'm still seeing lower highs as we move down. We had a very aggressive rejection earlier this week, and I would expect to see more downside. So a bit of a contradiction between yen pairs. I think the ones I like the most, like euro yen and pound yen, they look a little bit clearer to me. I like the momentum, and there's a lot of upside if we are going to see this trend continue. So I'm interested for some longs there.
Yeah, euro yen is just an absolute beast. That thing is just ripping higher here. Looks really clean. Definitely looking for that pullback as well. If I could get that, I'd be interested in potentially getting a position going there as well. And yeah, pound yen, similar concept to pound dollar. We've had some really nice breakouts here. Another one that's been pretty strong is Swiss yen. Do you ever trade Swiss yen?
Yeah, I do trade Swiss yen. Probably been a while since I've placed my last trade with it, but I do keep an eye. I mean, at the moment, I'm not so keen to trade this one because we just actually created some new all-time highs. So I'm kind of just seeing how price reacts here, whether maybe we start to pull back or is the trend going to continue. If yen is going to stay weak and Swiss, relatively strong, then of course we could still go higher. But I'd rather trade euro yen because there's still kind of a target for me to work with. Whereas Swiss yen, now that we've taken out the highs here, it's kind of like, okay, where's the next stop? I have no idea. But euro, I've got something to work with. So I'd rather focus there. But yeah, I do trade Swiss yen when there's opportunities, but it's been a while since I've touched the pair.
Actually, what's interesting about what you just said, Miko, is that when it comes to currencies, one of the things that I've noticed you talk about over time that you really like about currencies is that there's so many levels, because typically, you get an uptrend and it trends for a while, and then you get a downtrend and it trends for a while. Whereas with indices over the long term, they kind of have these like grindy uptrends and then big crashes and then grindy uptrends and then big crashes. So there's two different dynamics here. But what you just kind of iterated there with Swiss yen is we're hitting, I believe, and correct me if I'm wrong, maybe someone in the audience can fact check me on this, but I think this might be an all-time trading high for the Swiss yen. And so you express kind of like not having that level there, whereas euro yen, you can see we do have some levels here and some longer term ones in 2008. So, but with currencies, you kind of get that pattern very frequently where you have a lot more structure to work off of, it seems like, compared to, something that is, hitting all-time highs or hitting all-time lows.
Yeah.
So is that one of the dynamics that you really like about currencies, is just the structure kind of being all over the place?
Yeah, I mean, since I've started trading, I've started with FX. That's kind of what I got used to. I didn't really look at indices till I was like 3 years into my trading
Yeah.
journey. But yeah, I kind of like it because it's just the point of reference. Because of course, with FX pairs as a whole, we tend to do this most of the time. If you zoom out, maybe some do have slight trends with it, but it's very corrective. So we always have those kind of upper and lower limits where price is likely to test and maybe likely to reverse as well. So if we're heading to those areas, I can always be quite confident that price is probably going to get there and then maybe reverse. If we're beyond that, price is now creating new territory where I expect it to reverse at some point, but I don't know when that point is. I don't have anything to reference. So I do like that because it kind of gives me something to work towards, and especially as a swing trader, it allows me to manage my positions long term as well.
Yeah, makes good sense. I mean, yeah, I mean that's the way I trade currencies. I think I trade currencies differently than yourself. I'm more focused on like the dollar cost averaging, and I actually love that dynamic for currencies over the long term, getting these choppy back and forth markets, because it allows me, in a downswing, if fundamentally I like something, and I know that's another difference is I'm definitely more fundamentally oriented, you're more technically oriented. I can pick up, let's say I just like the fundamental story of whatever currency pair that I'm looking at. I'm comfortable picking up in small pieces a position, and I'm fine to hold it over the long term. As I think, most people know that a lot of the fundamental analysis stuff can take time to play out. It could take, months or, longer even, right? So I'm happy to, in the FX world, if I like a dynamic, to kind of build out a position, and ultimately hold on to it for a while before closing, if I'm correct, or closing for a loss if it continues and I was wrong about the idea. So that's one of my personal favorite things about the FX space, is just that dynamic. What about metals? What do you think about gold and silver right now?
Yeah, so silver I quite like. I mean, gold I like, so I'm bullish on both of them. But silver, I have kind of got like a clear-cut area which I'm focused on. The price action looks neat and tidy to me. I mean, maybe not currently; it's a bit all over the place. But we had a very big breakout not too long ago and left behind a very nice level here. So I'm basically just waiting for price to retest that. I've been waiting for the retest of that level since the break, so I've just been keeping a close eye on it. Kind of just looking at this as a consolidation or maybe a bit of a head and shoulder pattern, but I'm not too interested in trading in that area. But yeah, if silver can come back, retest 34.75 roughly, 34.8, I'll be more than happy to find some opportunities, because my bias for silver is bullish because of the breakout. So if price was to break back underneath, that'll actually not necessarily make me bearish, but I probably won't be looking to buy silver at that point anymore. So I like that level because it kind of makes my bias as well. And in terms of gold, again, the uptrend is still very much at play here. So although we've been looking a bit bearish over the past few days, gold is still relatively very, very bullish. So I'm still looking for opportunities to buy it, but yeah, not looking too good. I did have a trade on gold early in the week. I took a buy here, didn't play out too well. Price broke through that trend line. So now that we've got the break, I'm kind of like, what's the next play? I don't really have one at the moment, or at least one that I really like. I wouldn't mind to see gold come a lot lower, maybe back to 31.20, 31.30 around here. I think that's a nice place to pick up some longs. But besides from that, I quite like silver at this moment, so that's where my focus is.
Yeah, I feel like silver has just, at least right now, the cleaner move, right? You've been in this, you've broken out of the consolidation that we were in. Whereas with gold, you're still kind of stuck in it. Silver's had this really big break. I actually tried to get long silver too. It did not work out for me. I got long at this level here and then stopped out. So unfortunately, it got me. It whipped me out of this position. So my first attempt didn't work on silver, and I actually need to just check to see if I still have the potential for another silver long trade. It looks like no. So I'm probably going to pause on the metals just on the fundamental side. The confluence factor there is not quite there for me. But if we do pull back, I'd be interested in trying like that 3450 level, especially if the edge finder kind of lines up with my analysis. I do like this level quite a bit, but that would be sort of a thing for me to consider if we come back to that 3460, 3450 level. And then on gold, yeah, same thing. I've got the same level marked up that you mentioned, that 3120 area here, previous level of support, as well as previous level of resistance, and that big breakout around the April kind of tariff announcement stuff. So we'll have to see with where that goes next. What are your thoughts on indices? Last kind of major category, back to the all-time high for the S&P 500, for the Nasdaq. Nasdaq's hitting a new high. S&P is testing it currently.
Yeah, it's been interesting. I mean, I'm not too sure, to be honest, because I mean everything is still very, very bullish. I do think a bit of a drop is likely to come, because actually I was expecting that last week when we were discussing the indices on stream last Thursday. I said that things look quite corrective here. Maybe we might go for a bit of a pullback. In fairness, we did go through a pullback, just not as big as I was expecting it to be. But yeah, things are looking very bullish right now. S&P about to push back into highs. Probably will go and take them out. I feel like something similar to what the DAX did, in terms of the DAX kind of grinded higher, created new highs, and then we had a bit of a pullback. I feel like maybe S&P, NAS could go through something similar, but again, that might not happen for a couple of weeks or even longer. So not really something to focus on now. I think in terms of momentum, everything's bullish. I'm not really seeing any opportunities to buy really, unless we go through another push to the low end of the channel. That could be something to look at. They're all kind of moving within respective channels as well. NAS, I think we just plucked the highs, haven't we? Yeah. So perhaps another pullback to the low end of the channel could look good. Something like this. I'm expecting something a bit bigger than that, but again, that could take some time. But yeah, at the highs, I wouldn't be looking to buy or try to chase that. I would wait for price to come back down against me. I think US 30 is still lagging a lot behind. Yeah, so US 30s, I think, is an interesting market to look at, because we've still got quite a distance, kind of similar to like the Euro-Yen situation, S&P and NAS kind of making the highs, but US 30 lagging quite far behind. So I would say a strong break of this consolidation, that would be a strong sign to say that, okay, US 30 is in business again. Then perhaps some pullbacks and some retests could look really good. So I quite like US 30, a long way to go back to the high. Indices are still bullish, so I'll just be looking for buying opportunities.
Yeah, it looks really, really strong for NASDAQ, S&P, and then you've got the ones that are still kind of catching up. I actually have a trade on the Russell 2000. I think I talked to you and Marco about this last week, but I have a position on the Russell, which is it's not like the Dow Jones, because Dow Jones is like 30 ginormous companies, but the Russell is 2,000 for audience members who have not heard of the Russell index before. Most people have heard of the NASDAQ and S&P 500 and the Dow Jones, but the Russell is another major U.S. index that focuses on smaller companies. It's a collection of like 2,000 small cap U.S. companies. Now, these are still big companies. They're not tiny, but they're still not nearly as big as like your Apples and Amazons, if you will. So the Russell has, similar to the Dow Jones, in my view, it still has definitely plenty of room before it can get back to those all-time highs. And I do think that if we get interest rate cuts this year, that the backdrop for the Russell looks really good. We've also had this sort of downward trend, the longer term downward trend breaking out to the upside here that I think looks really good. So I like the Russell. I also like the Dow Jones, as you pointed out, sitting at that resistance point here currently. Let's see if we can get something like this, some sort of breakout, pullback, continuation. I think that, these ones that still have room to continue higher. What's interesting is that, you're getting such a strong lead from the NASDAQ because, of course, all the tech stocks are rallying. You have like Palantir and NVIDIA and, all these kind of exciting names that are rallying so hard. But there's still some great companies that I think could play catch up and could be kind of a big player in the second half of this year. So we'll see. But Dow Jones and Russell also, in my view, look really attractive for possible moves towards those all-time highs. And then your point about like the DAX. We saw the DAX. I do also have a small long position on the DAX, which is pretty much break even currently. We had that big break through the previous highs. We retested it once, shot through or shot right back up, and then sort of fell back here. I got long. I was a little bit early and I almost stopped out, but I'm back to break even on this trade. So we'll see if indices want to keep going. It usually is sort of a global thing, right? They typically all move together. The US indices, the European indices, Japanese indices, Chinese indices. They typically have high levels of correlation. So we'll see if the DAX can continue to perform really strong like it has so far this year. What else? We could talk Bitcoin. What are your thoughts on the crypto world right now?
Yeah, it's been an interesting one. I think with Bitcoin, I don't know. It's an interesting one. We're still kind of at the all-time highs. We're stalling a little bit. We have we've struggled on a couple of occasions. We created the all-time high over here, then we created another swing high beyond that, and potentially could be creating another one as well. So the way I see it, we've had a really nice rally. Price is now pausing, and it's kind of 50-50 which way price is going to go next. We could see, a bit of like a consolidation for price to break out and then we're on our way. Or it could be a situation where we struggle at highs, maybe form some type of double top here, and could see Bitcoin fall. So I'm kind of neutral at the moment. We're stuck at resistance. We're forming lower highs. I can see a move to the downside here on a kind of more of an intraday chart, but again, I wouldn't be looking for any bigger sells until I see price really make a move outside of this kind of range here, whether it's the downside to the upside. So that's really what I'm waiting for on Bitcoin. But it's very interesting how we're really struggling at the highs. Kind of similar to what we did last time. We struggled at the highs, consolidated, then we had that big breakout. I wonder maybe is price going to do the same? I think an interesting chart though is Ethereum actually, because Ethereum is of course nowhere near the all-time highs with BTC, but we are testing a pretty big level of support, which I do like the look of actually. I think if we can really respect this, there is some upside. Maybe if BTC rallies a little bit, we could see a rally with Ethereum. Of course, in terms of the current price to the all-time highs, we're almost half, not far away from it. So there's a lot of possibility there for gain. So I quite like Ethereum. We're at support. If we can respect this, there's room to the upside. BTC is at high, so I'm not really seeing much opportunity there, but I'm just waiting to see which way we break out this range.
Yeah, and that's the ultimate question, is like if you're bullish on cryptocurrencies, in recent years, the crowd around the crypto space seems to have kind of been, the natural next step is like if you really like crypto, you probably think there's more gains in some of the other coins rather than Bitcoin. What's been interesting has been, for the most part, Bitcoin has done really well compared to the vast majority of cryptocurrencies, which I think is really interesting. It didn't play out the way I thought. I would have guessed that, crypto, I have kind of always thought crypto will probably continue to be a thing and continue to do well over time. And so the theory, I think, would be like, okay, the small ones should do better. That's not really been the case. I have two really quick charts that I want to show everybody because I think this is really interesting to the sentiment in markets right now. the Bitcoin to gold ratio, and then I've got a new one that we've not talked about before. We do a lot of on this, segment with Miko and Marco. We love to talk, market sentiment tools. We like to look at relative strength. These pseudo technical sentiment tools can be really fun just to explore and to get an idea of how charts are comparatively moving. So what we're looking at first here, everyone, is the Bitcoin to gold ratio, and all this is telling us it is. Get ready for it. Some high level math. It's taking the price of Bitcoin, dividing it by the price of gold. That's it. So the Bitcoin to gold ratio, however, plotted over time is pretty cool because we've applied a moving average to it. And essentially we've just said, if this thing is trending above the red dashed line, which is the 20 period moving average, you've got an environment that would suggest potentially risk on. And if you're in an environment in which the Bitcoin to gold ratio is trending lower, we would call that more of a risk off environment. So recently we've broken back into the risk on dynamic. So we'll see if that can continue to be the case and if Bitcoin can continue to outperform gold. So, and both, by the way, Bitcoin and gold could be going up or one could be going sideways. The bigger question is just the relative difference between the two. Let's say this is gold and this is Bitcoin. In this case, this would cause the ratio to move lower and vice versa. So something to think about there. So this is suggesting risk on, but I've got one other chart to show you guys, which is on our other tool that is sort of still in prototype build out mode, which is the stock box. This is more focused on stocks, but bear with me because this is very useful to everyone in terms of market sentiment. What you're looking at here is the consumer discretionary part of the market, which these are companies like Nike, Tesla, Amazon, stocks that essentially represent companies that you don't have to purchase their products, but people buy them when they want cool things, right? So the cool things stocks versus the you need these things. So going to Walmart and shopping for groceries, going to Target, going to well, actually Target I think is, I got to check this, but I think Target is a consumer staple, but it might be a discretionary. Point is, these stocks are things that you need. These things are stocks that you want. And so we've built this table to do the same kind of study to give us a risk on versus risk off sentiment gauge. And what we can see here is that with all the craziness in the first part of the year, we had a very risk off environment where people were choosing to buy consumer staples way more aggressively, right? Or the stocks were doing way better for consumer staples than discretionary, which were getting killed. And now recently we've trended back into people making more speculative buys on stocks that are people's wants, right? So they're buying Nikes, they're buying things like that, right? So I think this is another cool sentiment gauge for us to consider adding to our list of things that we look at. So I just thought that was cool to add into our Bitcoin to gold ratio study. We also have consumer discretionary versus consumer staple stocks to get an idea of how, people are approaching risk. Are people taking risky, buys on things, or are they being more conservative and a little bit more fearful about the future of markets? So just something to add to our rotation, Miko.
Yeah, I mean, it's quite interesting to be honest, because I do keep an eye on correlation quite a lot, not in that much detail. But of course, I do trade quite a lot of FX pairs. And the thing about FX pairs, they kind of do have moments where a big group of them will move together. And if I can find an idea that kind of aligns with maybe like 5 or 6 different pairs, that's always a nice confidence for a trade. If I'm like trying to buy Euro USD, but I'm also seeing Pound USD is bullish, Aussie dollar looks bullish, New Zealand dollar looks bullish, it's always a great confidence for a trade. So I think keeping an eye on sentiment and correlation is definitely a huge confidence for trades.
I do think that if you were to cross, and I don't have the stats in front of you, but if you were to look at like the Bitcoin to gold ratio, and then you were to also look at the consumer discretionary versus staples ratio, and then you were to look at like the Australian US dollar versus the Japanese yen, there's a good chance that these things are going to kind of look similar, because the idea here is that people buy riskier assets across the lexicon of financial markets, typically at the same time, and they sell them at the same time too. So if people are feeling good and they're out there buying, Teslas, and they're paying for a house down payment and all these things, if people are feeling good, typically the risk off currencies are going to get sold and the risk on currencies are going to get bought. So we can relate these topics to all markets, right? This is why, these sentiment indicators and fundamental indicators can still be applied across a large swath of different markets. So, and also, you can also just keep an eye on the price of Bitcoin. If Bitcoin is trending really well, I would imagine that probably bodes well for certain more risk on focused currencies like, maybe CAD, Aussie, Kiwi, things like that.
Yeah, no, exactly. Especially because with, when I look at AUD pairs, I kind of look at literally all AUD pairs, so Aussie against the yen, Aussie against the CAD, Aussie against NZD even. So when you can see when things are risk on, risk off, and you see how Aussie affects all those other currencies, it does kind of allow you to provide a bit of a filter as well to your decision making, because all trading is just making good, educated guesses. And if you can add a bit more education to it, then you're putting yourself in a better chance to succeed in that trade.
Yeah, the more you know, and there is such thing as over kind of analyzing, but I do think that's simple. Whether what you choose to look at, for example, sentiment indicators to me are like, I don't leave home without them because they're really simple to understand and they don't complicate things too much, but they can be very useful for just getting an idea of like, let me make sure I'm looking at like the way the whole market is operating and just getting a quick pulse check through the sentiment tools. I think that can be really useful. Miko, thanks for coming on. I appreciate you. I know it was just a you and I. We missed our commentary from Marco today, but it was awesome just to get to go through some charts with you and share some ideas. For everybody who enjoyed the commentary from Miko, make sure to go subscribe to his YouTube channel. We'll drop the link here in the chat to where you can check him out. He has a Telegram channel. He has social media. So just search up his name, Miko Audu. You can also, like I said, click this link if you would like to check out his YouTube channel or just search it up at Miko Audu as you see on your screen right now. Miko, thanks so much for coming on today, man.
Cheers. Thank you. See you next week.
All right. Have a nice weekend. We'll see you next time.
Bye.
All right, guys. We have Chris Pulver coming soon. He's not quite ready yet. So I'll just take a second to remind everybody some of these tools that we just showed. I kind of gaslit some of you guys, but then I also didn't for others. So let me explain what I mean. The Bitcoin to gold ratio is free to use right now. You can get this tool as well as others with the Edge Finder during our Edge Finder free week event. We'll drop the link here to where you can try it out this week completely for free. Literally just fill out this form, put your email in it, and a link to the Edge Finder will be sent to you that is operating until Monday. So highly recommend. However, I have a warning, okay? I have a warning. The warning is just know that before you use the Edge Finder, just know they are highly addictive tools. The second you start using the Edge Finder, you won't want to not use the Edge Finder anymore, and you're probably going to purchase the tool someday. Is this hypnosis? Probably. But genuinely, we built some pretty cool stuff, and here's some testimony from Vampire Doggo, who's trying out the tool this week. So this is your fair warning. He says, I've been toying with the idea of getting it for about a month now, and after this week, I have to get it. It's been so helpful this week. Appreciate that very much. And I know a lot of you guys who do have Edge Finders are big fans, just like I am. I'm on the design side, but I also use the tools constantly. And I just simply, I mean this so genuinely, I could not trade without it now. It is so convenient to have this stuff right in one portal. And you guys can see, I can flip through stuff like this, and I don't have to do like a whole bunch of searching to find stuff. Sure, a lot of this stuff can be found available for free online, but it's your time at stake. How much time do you want to dedicate to digging for data and hoping that you can get it in the right format? How much time do you want to take to hand scoring stuff, right? Having a system to sort of back your trading and add insights to it is game changer. And so the warning, like I said, and Sean agreed, appreciate that, Bala. I appreciate you guys who are fans of the Edge Finder who speak up nicely about it. We've worked so hard to build it into what it is. And, I have the vision to continue to make it more and more accessible to traders all around the world. And hopefully through this week trial, traders will see the value and get themselves a copy, and by doing so, be supportive of our work. One thing I'll also mention that has not changed since day one: if you purchase a copy of the Edge Finder, You get future updates for free. It's a one-time payment. And I can't tell you how many times people have said you should change it to a monthly because you'll make more money. And for us, first of all, here's the true reality is we know a lot of people quit trading. So we'd rather just sell you a lifetime copy at the best possible price that we can. And for people who are genuine long-term traders, it's a remarkable price. If you see yourself trading 5, 10 years from now, and our team is building and maintaining all these tools for you during that time, the amount of value you're going to get from the tool for the one-time price, we know it's a steal. It's a steal deal. But that's how we want it to be. We want people who are big fans of our tools to use them for years and to support our work and to share it with a friend and make it so good that you can't leave home without it. It's kind of like if you think about like Google offers all these amazing services for free. Like a lot of us are using it right now. Unless you have YouTube Premium, you're using YouTube for free. If you're using Twitter, we're streaming on Twitter right now. Twitter's free to use, but you build these things that are so valuable to people, and then they can't help but want to buy the premium stuff, right? Bala, that's the strategy, right? The truth is, we unfortunately know there's a very high turnover rate, and so let me be so for real with you guys. So we don't do monthly memberships to the Edge Finder because we know most traders are going to quit trading. So if you are the person that is serious about your trading and you purchase the Edge Finder, you benefit massively from the way we've set it up. Here's why. If you are somebody who pays monthly, you're going to end up paying way more money if you use the Edge Finder for 5, 10 years. Imagine paying monthly $200 a month or $150 a month or whatever if we were to do that monthly option, or buying it for even full price without any discounts, $1,400. You pay one time and you use it for 10 years, your monthly value is super low. If you're somebody who, quits trading after a month of trying it and says it's way too hard, then yeah, it's probably not really a great deal. But the Edge Finder is mostly built for experienced traders who are going to be here for years and years and years. So it's a really good price if you see yourself trading for the long term. It's not a great price if you're looking to make a quick buck and stop trading. So and that's how we've designed the tool and our pricing around the tool. If you're somebody who is like, I'm going to trade for the next 10 years, you should absolutely buy a copy if you think about it over the course of a 10-year payoff period. How much is the Edge Finder? Let's say you get it. So here's some more fair warning. So the Edge Finder is free this week, right? The Edge Finder is 45% off next week. Okay. So there's some heads up. There's a little bit of a leaked info about the upcoming sale. Next week, it's 45% off. That means you pay 55% of the $1,400 that it usually costs. $770. If you do a $770 purchase of the Edge Finder over 10 years, that's divided by 12 months, right? Divided by 10 years, you're paying like $6 a month to use the Edge Finder over that 10-year period. So it comes down to being like really cheap if you actually are planning on using it. So for people who already have the copy, if you use it for 10 years, the cost of the Edge Finder is very, very little. That's the point. And we want it to be that way. Like now obviously it's a one-time payment up front, so you do have to make the payment. But once you do, the purpose is we want the tool to be not something that, costs you every single month for 10 years. Right? What's the guarantee that you and the Edge Finder would be around for 10 years without any upsells? No guarantees. We could shut down at any second and run away. But we're not going to do that because we have a really good business here. So we're not going anywhere because we do really well doing what we do. And we have huge plans to continue to build a tool. And here's the actual reality is if the company somehow discontinued, we get that question sometimes. What happens if you leave? Well, if we leave, the company probably gets sold to another similar business who will almost certainly, as part of the deal, continue to support the tool. With 770 pounds, I can buy. Well, 770 pounds is different than dollars, but also you could pay for instant challenging. But do you have the tools to actually consistently profit on it. And if you do, then, do your thing. But most traders who want the edge finder are looking for insights and data to add kind of confluence with what they're doing. Let me just, James said he would be back on today, but not back apparently. Okay, no worries. Let's just see. So I think we had James. So James was scheduled here. So he's no longer here. Yeah, I might need to cut out the stream early. We're moving offices next week. Well, actually this weekend. I'll be moving. We've got a moving company and moving our office to a different location this weekend. Link doesn't work. Rico, could we drop this link one more time? Just make sure that is working on our end. By the way, just in case you're just tuning in, I just shared all of their upcoming sale discounts and all that stuff. The Edge Finder is free this week. If you want to try it out, there's the link. But what if I go somewhere? Yeah, I mean, here's the thing. I'm not going anywhere. I love doing what I do so much. Unless I physically can't be here, which, God forbid, and God willing, I can continue to do what I do here. I'm not going anywhere. I have too much fun doing this stuff. It's a ton of work and it's incredibly stressful, but it's a lot of fun. Yeah, we're gonna shut it down here. Sorry to people who are looking forward to James coming on today. I think we just haven't heard from him, so we stayed 10 minutes extra just to see if he would show up. So all good. It happens. Maybe we had a time change or something. I'm not sure, or he just got stuck in traffic. Who knows? Anyways, if you're having any further issues with, Rico, send us a message on our website, a1trading.com, and our support team can help you there. Cedric says the link works fine. Yeah, if you're having any issues, just message us on our website. Like I said, just head over to a1trading.com. There's a live chat feature. All right, guys, that's it. Thanks so much for tuning in. Have a great rest of your day, and we will see you back tomorrow. Peace.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.